Welcome to our real estate accredited multifamily real estate meetup, where we just go over the nuts and bolts of real estate investing, getting involved as an investor or as an operator. As always, feel free to ask questions, and we always request people send topics of interest so that we can provide value to you. So I'm your co-host, Jeff Rodriguez, co-founder of Boost Capital Group, and Philippe is the other co-founder. So we're just going to go ahead and respect your time. We're not going to take too much time with a lot of detail, but we're going to go over the information that we prepared for you. Philip, if you please take it away.
Thank you, Jeff. Yeah, welcome to our Thursday evening event. Real Estate Accredited every Thursday, 7 p.m. Eastern, broadcasting live from Atlanta, Georgia here. Tonight, we will talk about the acquisition process, the due diligence. As Jeff mentioned, our focus is on in-place commercial multifamily value add. And yeah, let's get this going. Thank you for everybody who is joining us. Some familiar names. Welcome, welcome. So again, today, acquisition process due diligence. As Jeff mentioned, if you have any question, please feel free to ask. Either you can unmute yourself or just drop a note in the chat. If there's something that we didn't define, you don't know what it means particularly, let us know. And otherwise, we'll do a quick Q&A as well at the end. All right, so acquisition process due diligence. Here, I'll start with a little chart that I've shown in a prior call. This is like the total overview, high-level timeline from an investor view, passive investor or active, going from deal finding to underwriting, submitting a letter of intent, an LOI, the acquisition process, obviously including closing, then the execution of the business plan, an optional refinance, and then disposition and eventually the shutdown of the entities. So today we're going to really focus on a sub-part of the acquisition process. And for that, I have a zoom in, if you will, on the acquisition timeline, or rather the ideal deal acquisition timeline. So going from your LOI being accepted to signing a contract to due diligence that I could have or should have highlighted because that's the topic of the day. And at the end of due diligence, there will be a decision to go ahead with the deal and then raise capital, work with the lender until closing. The ideal time frame that you're going to have is about 30 days to do your due diligence. And we're going to go in every step more in details. And then after that, typically there's another 60 days to closing. So it's a total of 90 days. But it can vary greatly depending on the deal and many other factors. I'm not going to use this right now. It's a little bit messy, and this is something I use with my students in general to go on the different steps, but I'd rather go in a more sequential view of the different steps here and what you have to take care of during the due diligence. Our number have a total of eight things that you're going to take care of during the due diligence, like the big chapters, right? So the first one is the financial analysis. So in order to perform due diligence, you're going to obtain and review the property's financial statements, particularly the income statements and the bank statements. And here your goal is going to match the statements that you've received as to the bank statements, pretty much. And I would say also to the different rent rolls. And the idea is you want to make sure that whatever on the financials you've received for that particular property, you want to make sure that the bank statements are going to reflect income and expenses that should be aligned. So I think the reality is going to be a little bit different because there are always like some lag on financial reporting, let's say. And it can, for that reason, it may not 100% match the bank statements. But overall, income and expenses that you'll see on bank statements should be within 5% of each other. And same thing when you're going to cross-check the rent rolls. So the rent rolls, the list of all the people who are renting the place for how much, you're going to compare the rent roll income on a given month to the income that is shown on the trailing 12 months. I could have also added at that stage, you may want to check the utility bills and make sure that the utility bills are reflected properly on the trailing 12 months of operations, income, and expenses. Next, you're going to perform a tenant analysis. So for that, you're going to look at every single lease and make sure that the information in the lease agreements, they are matching the rent roll. On the rent roll, you will see obviously the name of the tenant, their unit number, but more importantly, what's their rent, when did they move in, when did they sign, when did their lease begin, and when does their lease expire. And you want to make sure those are the information that you'll see on a rent roll, and you want to make sure that everything aligns. It's not unusual that there are some differences. Usually nothing crazy, it's just like mistakes. But obviously, if you see that the rent roll is showing rents that are much higher than the leases, then you have a problem. And that's where you may really start asking questions. And basically, if you've observed something that is not in line with your expectations, if it's going in the wrong direction, that would be a reason to break the contract at this point, because you were told something, and when you take a closer look, you observe something else. That's not something that you want to carry on necessarily working on, right? Because in other words, people may have lied to you. That's the whole purpose here, like to check records and the information received. If possible, it's not always something that you can do, but if possible, you could take a look at the applications that were filed by tenants, just to evaluate what type or where do they stand on income, and what kind of, where you want to start gathering information about the tenants, understand who is currently renting the place. Because if you plan to increase rents significantly, they may not qualify from income standpoint to pay the rents anymore. So that's something that you have to check. But more importantly, you want also check are they paying their rents on time, or are they behind? Do you have delinquency, etc.? Which just check the information. That's something that you probably have some visibility on the prior step before to reach the due diligence, but it's something you want to double check at that stage.
Yeah, and just touch a little bit more on, if depending on the type of property you have, there might be some Section 8 tenants that there might be at their max in regards to how much the tenant can pay in that area. You might be determining that those properties that you're going to raise rents to that higher tier, but the Section 8 tenants that you currently have or are currently in place may be at their max, or they're not keeping up with their side of the bargain, getting the inspections done, and they may lose that support from the state when it comes to Section 8. So they have to, sometimes, depending on the state, they have to get people to walk through, inspect, and qualify on a monthly basis. And if they're not doing that, they're not opening the door, they're not available, you could lose that tenant's income from that standpoint, but also have a tenant that's no longer paying that rent. So looking at those comparing the rent rolls with those leases is very important because that's not going to be in the T12. It's just going to see income, money in, money out, but not that granularity of what's really going on with the tenant and their lease.
Yes, indeed. So next we have physical inspection. And that's going to be, so I would qualify the two first bullet points as more as paper due diligence. And now you have the physical due diligence. So you're going to hire an inspector to do a thorough physical inspection of the property, right? So they're going to go inspect the exterior of the buildings, take a look at the roofs, crawl space if there's something, or basement if there are things of that nature. Look at, assess the foundations, plumbing, which is not obvious because it could be not necessarily readily available, but they'll look at what they can, certainly. All the electrical panels, HVAC, etc., and do a unit by unit inspection, which is also an opportunity to gauge what's the level of finishing of the different units and the need for any repairs. So here, again, last week we spoke about underwriting, and you submitted an offer and you had to make some assumptions based on the information that you've received. And now you're just cross-checking your assumptions to the reality of the condition of the building. So here you want to confirm any necessary repairs or renovations that you plan during underwriting. Yeah, so that's just what I said in a nutshell. Very important step here for the due diligence.
Yeah, and more times than not, that's a paid step. Depending if you're working with a team that's vertically integrated, they might have the contractors in-house. But if not, then that's obviously a sometimes by door cost to inspect or entire. So it varies.
Yeah. Last time we did one last year. I think we are very fortunate because it was 82 units, and they charged $10 a door, which is unheard of. But typically it's a little more expensive. I would probably be ready for more like $40 or $50 per door. So next we have market analysis. And again, that's something that you started during your underwriting process. But really at this point, so you're going to do basically the same steps, but you want to experience that in person, right? You may have had the opportunity to take a first look at least during your initial underwriting, but at this stage, you really want to go to a high level of detail, like from the analysis of the local real estate market, just understand, is there any developments nearby, new construction and so on? Who is your competition? How are the other properties looking? Any new businesses, shopping center, things of that nature? And same thing for the growth potential of the neighborhood. Is there anything coming up? Or actually a door being closed, shopping centers being closed nearby, which that would be a bad sign, obviously. Double check crime rates. I know it's good practice, like just to go to visit the police station and just ask them about what's going on in terms of crime, anything to worry about, because you want to invest in the area. They should be able to answer these questions. Similarly, you can talk to the town depending on the size of the market and so on, but you can reach to officials to have a good understanding of what's happening in the submarket. And also, finally, we want to take a look again in person, look at the different amenities available nearby. Like you really like the goal is to understand the neighborhood, right? And as a result, you want to consider any factors that may impact the property values. It could be in positive, it could be in negative. But that's very important for you to understand the neighborhood very well. And finally, very important step as well, you want to shop the rent comps. In other words, the similar properties in the area, similar vintage amenities and renovation level. Go there, take a look yourself, understand, are they really a competitor? Are they better? Are they worse? And where this is the goal is to confirm what your rent can be or should be based on the same level of finishing.
Yeah, and this is where the company, the property management company that you would be hiring helps out a lot because they're gonna be on the hook for a lot of the rent escalation, the rent growth, because if they say that it's achievable, then you're working together, or else they'll be fired and you find a different company. But then at that point, you already pulled the trigger, you're stuck with this property. So that's what's very imperative to find out all these type of things, the crime rate, amenities, be realistic on comparing the amenities. If you say you're going to be able to put a pool in there, we looked at properties before where the broker had all this plan that we can add a dog park, a play area, and all these things, but in reality, there just wasn't enough room for that. So there's always those type of things that to consider. But comparing amenities too, people will go to a different property because they have a gym and you don't. So it's a reality.
Yeah, it makes a big difference. It makes a big difference. So next step is you're going to finalize your business plan and underwriting. So again, it was a recurring theme for the prior points. Now you're just confirming all your assumptions, making sure that what you understood and assumed is correct, right? So you're going to ask for quotes in writing at that stage for financing, for instance, for insurance, for all the repairs to be done, to talk to contractors or via the property manager, they can do that for you. As Jeff mentioned, finalize your budget with the property manager, income expenses. Now you should have all the elements that you need to take care of reviewing that and finalizing the budget. So based on those numbers, you're going to update your projections, right, to finalize your analysis. And also you're going to consider various scenarios and sensitivity analysis to account for potential risk. That's something we talk regularly about, and I think it's a very important step. Understand what if scenarios are very important to take into account. And you always want to, one of the major way to handle this sensitivity analysis is to basically dimension or add some reserves to your acquisition so you can be able to sustain the
Business plan.
yeah, to sustain any issues that you may face, right? So it could be maybe the rents are going to get lower, maybe there's a lower occupancy, it could be a higher cap rate. What's the effect on the returns? And where can you use reserves to be able to carry on with your operations? Now, a couple of topics that are more, I'm not sure, I wouldn't say they're not important, but usually it's more like the legal team who would take care of the these topics, and on the yeah, they would take care that they would review particularly, I would say, both the environmental and particularly legal, obviously. Yeah, I think it's even more like the environmental is more, I think it's a feel good thing for the lender. Usually they would make an assessment on any risks from an environmental standpoint. Usually it's known in advance, so there's no surprise there. And if there was a gas station nearby and they had like tanks and whatnot of for the gasoline, it would be, it's not something that is changing often necessarily. I guess it depends where for markets that are growing, but it's very important analysis for the lender particularly. And again, there's something important there. I never had such a case. I'm sure there are issues, but I think anything critical would have been disclosed up front. Otherwise, if it was not, and you discover something that is critical at that stage, again, it's a matter of it's enough to break the contract because things should have been disclosed. On the legal side, you're going again, there will be a review by the legal team who's taking care of the closing. They will look at particularly the zoning and liens. Those are the most critical, the title and so on. And this is more, again, I would say legal. Now, this is more like a state by state. And I know it's interesting because apparently in Georgia, it's not as important as it is in other states, but local building codes and regulations, different states, different rules. So that those are things that you may want to check. And I think the inspector would be able to report any code issues to you. That would be part of their scope. But those are things to be considered. And I would say usually it's pretty straightforward. Again, there are not necessarily issues, but again, anything can happen. You never know. And it's good to have a good team, to be surrounded by a good team who can look at these different topics. So after all these steps, part of the due diligence, you're basically ready to make your final decision, right? So either you confirmed your findings or there were some changes and now you updated your underwriting. So it could be that you're going to renegotiate terms with the seller and you say, we found this. And basically we were told that. So there's a gap there. It's going to cost us money to resolve these issues. And then we can only afford to pay less. And otherwise, especially, and I think it's very important here, if you want to walk away, you have to make sure that you don't have earnest money that is not refundable, right? Because if it's a non-refundable money, it's harder to walk away. But sometimes it's better to walk away than to stay in a deal that is a bad deal. So that's part of the risk assessments. And maybe next week we could talk about the letter of intent process and how you lay down the different terms in that letter. But that's different strategies that you can use about that.
Paula dropped a question. Pretty much, I think I said at this point, your team may have a lot of money to lose. And I assume it's for the money at risk, non-refundable. So how can we write that contract in a way that minimizes that risk?
Because you have environmental, you have origination stuff that you filed, origination fees, earnest money, your initial option or feasibility money. You could lose a lot.
Yeah.
Depending on what you didn't research or didn't write properly. So I'm just wondering if there's a way to write it to where as soon as I typed that, you said non-refundable versus refundable or earnest money.
That's why it's one of the, so yeah, you have to do it. You have to spend the money, I would say, progressively. For instance, in this timeline, I'm saying maybe do the loan application more once you've done the bulk of your inspection, right? Because now that you're leaning towards the go. So it all depends on your contract. So it's a catch-22 to some extent. But so let's go back to what you mentioned. For instance, environmental phase one, typically it's already, they would be satisfied with a prior environmental report. And that's something that is going to be part of your loan application fee. So what you can do, you can negotiate, talk to your lender and say, let's spend the money once it makes sense. So you want to, because we're not sure we're going to close. So what do we need to do now? Have that discussion with them. What do they need to do to go to the next step? And I know they can refund some of the loan. Some of the loan application is going to be to pay fees, to pay legal, to pay the reports, and to pay themselves. So there are three three components to that. So they're not going to engage necessarily a legal before. So usually I think they will take one part of the fee that they're going to collect. Then they're going to pay for reports. They're going to do their own inspection actually, which is, it's a physical assessment, something, it's a PA something. And they will do the environmental report. But sometimes you can get the environmental report from the
Hello?
seller. In that case,
Uh,
it's recent enough that it can be reused. So yeah, you have to spend that money progressively and to be strategic about this. But you can easily, between the inspection and at least part of the loan application, you can engage easily like 10,000, I would say. It adds up quickly. So you have to be strategic. But it's not, if you go after a large deal, you can have 50, 100,000 hard money day one. So that's different magnitude, right? So from a contract standpoint or purchase and sale agreement, PSA, what you want is a refundable earnest money deposit. So you can get out with minimal exposure.
Yeah, and the non-refundable, like hard money day one, all that wasn't always the case. Just as competition increased, teams or financial institutions started throwing that extra money around. So it made it a lot difficult for small operators to really compete. Just something to consider, that those hard money day one may not be around forever, but that's always a kind of leg up if there's extra capital and you just know that deal is going to work because the analysis has been thoroughly done and vetted, and you're going to go after a deal and you just know that this is a good deal. So you're going to take on the deal. And so hard money day one can be a benefit, but no, that's a deal that you are going to take down and because it's going to work.
So another strategy, which actually that's the one we used for on the deal we were pursuing last year, you can do an early access agreement. So now, and you basically, before you sign the contract, you have a mini contract that will grant you access so you can perform your due diligence, documentation analysis, and the physical inspection. So that's a way. So now, if there was doubt at that level, which again, in my in my experience, that's where typically most of the issues would come up when you do the paper due diligence, meaning that you go through all the financial records, basically the leases, rental leases, and the physical inspection. That's where you're going to find most of the issues, right? So if you have an early access agreement with no money down, no earnest money, and just say, okay, you give us access for 5 days, whatever you need. And then once we finish the early access, then we go into a contract negotiation phase. That's a way to work around that issue that you mentioned, Paula, I think. All right. Is there any question? Any other question? Happy to answer anything.
Yeah,
Yep.
Philippe, I asked a question about your little pre-mini contract. I've never seen one of those. What does that say?
What's the question?
Yeah, how do you get a copy of your pre-mini contract to let you in? And is that exclusive depending on what you submit?
There will be a lawyer involved.
With
It's just a
your
matter
attorney-
at the high level, you're going to say, look, now in your LOI, you're going to say, we want early access. So now instead of saying there will be due diligence, there will be this and that. So now you're saying, I want early access. And then when we finish early access, we'll do PSA and then we do whatever closing in 60 days or whatever. So you're rearranging the steps here. I guess I could do another timeline, but that would be at the LOI level, at the letter of intent level, that you're saying, this is what we want to do. And I can look for an example if you want.
Yeah, I've
And then
never
the
heard of that.
lawyers, so now you're going to need lawyers nonetheless. So that's where you're shifting some of the cost, but you're adding cost. So a lawyer, but they will do, like I said, it's a smaller, much smaller document, maybe 5 pages, that is going to say, okay, we want early access. And basically the goal is to do the inspection. So we're going to have access to all the units and you'll provide due diligence documentation. And there's no money, no earnest money, because you're not in a contract per se. It's just early access.
Thank you.
Hey, Philippe. Hey, Jeff.
Hey, Brandon.
Yeah, we're inside of a deal now. And what we did was basically a guy with a broker, we're actually like giving 2 property managers a shot. So they were kind enough to let them gain access to the property. And they walked it and they actually walked it, took pictures of some of the units as well. You can do that too, to save yourself some time and a couple of bucks too if you want.
But did they access all the units?
Not all the units, just the vacant units.
Yeah, that's certainly something you can do, I think, during when you're doing your underwriting and initial assessment.
Mhm.
But
Pre-LOI.
I think you still have to do an inspection after that. I would
Yeah, of
not
course.
skip. Yeah.
And just to piggyback off that question, one of the PM actually owns a construction company. So I was going to ask if it would be feasible to let them do the inspection and the walkthroughs or hire out another company for that specifically.
So I think I would say if the inspector, and I'm not sure, maybe different states, different regulations as usual, but usually inspectors, they're going to be like certified or something. They need to have some kind of license.
Okay.
If they have a license, by maintaining that license, they have whatever they see. So they can, going to be biased. I mean, not necessarily. If it's a third party PM in any case, I don't see necessarily a problem with that.
Okay.
Yeah.
Yeah, especially if you're going to work with them. They know their contractors, their people. They've developed that relationship, and I don't think they would be working with them because it might ruin their reputation. So there's always that.
Okay. Right now it's looking pretty good. We should we're going to finalize the LOI tomorrow. We're still working out like a couple of terms. Thanks.
Yeah, that's great, Brandon. Good to hear.
Thank you. Thank you. It's
Happy for
been a
you.
long time coming.
Congratulations.
It's been a long time coming, Philippe.
No, it's tough. It is tough. It is tough right now, but you've done what needs to be done.
Yeah, so we'll finalize it and then we'll send it over to the attorney probably tomorrow, Monday, and then they'll start work on the PSA.
The PSA, yeah.
Yeah, this is my 1-year anniversary this month. But it took me a year to find this deal.
Yeah, it's been definitely much more challenging. There's no question about that. The interest rates and whatnot.
Yeah, when we started out, the rates were at 3%, right? And deals were everywhere. They were coming out the wall, and then they shot up to 8%. So now they're pretty much, I don't think rates are going up, but they're pretty much stabilized now. So we got a soft quote for agency debt, 6.25, 6.5, but 6.25, I think that's where it's going to be. So it's pretty good now.
Yeah, it's getting better. It's
Yeah,
getting
keep your
better.
eyes open because the writing's on the wall. The interest rates may be coming down. And plus, it's election year, so by the
Yeah.
time you get in there, those rates may be a little lower.
Good. It's penciling out now at 6.5. It can
Great.
only be better. So it's great.
All right. Does anybody have any other questions and concerns, or even a topic of discussion that they want to go over? We always welcome that.
Yeah.
At the end,
I do. I have some questions.
hey Mark,
From when we've gone out to every property management company in the United States for our products, we have a Firebot residential stovetop fire suppression system, and we have a water leak system that can stop half of all water leaks. We actually can detect water, turn off the valve. But when we're talking to these management companies, it seems like who is the decision maker? Now, I don't know if you guys know this, but a management company actually makes 4% of, say, the gross revenue that comes in from one of these apartment management companies.
right.
I don't know if you guys hire property management companies to take care of the properties you purchase, or you do it yourself and you collect the 4%. One question to see how mechanisms operate.
No, absolutely. Most operators would hire out to alleviate a lot of, because there's so many moving parts. So you just managing the manager, the property management company would be hired and do what they do in that specific market. They're the pros in that market. Since we're invested in several states, so for us to be 100% familiar with all the rules, regulations, and laws of each state would be a huge undertaking. So there's a lot of confidence put on the property management companies. So we vet them, talk with them, and get to know them. So in regards to a system or it's a product, or is it a service that you have?
It's a product.
The product.
Yeah.
So the product essentially be the property manager pitching it to the operators, but ultimately the operator would make that decision based on the cost and the savings. It would probably request the property management company to do a pro forma on what they would save, and that would be more work for the property management company. But if the numbers pan out, and also if there's a savings when it comes to insurance and things of that nature, we're always trying to lower expenses, increase revenue, right? If there's a good estimate that there's going to be a increased income or lowered expenses, there's something definitely to consider. But yeah, you could present this to the property manager and they could send it up the chain, for lack of a better term. Or even reach out to the operators and say, hey, this is what I have, and they're going to decide whether they want to install this in their properties.
Yeah, we've been successful so far.
Okay.
The selling cycle, though, is much longer than we anticipated. We're saying it's beyond a half a year. If you get any of these properties, say, commit to, oh, we'll take 400 firebots, install them in because we don't want any more stovetop fires, right? But it's almost like turning into a year and a half, maybe 2 years before these properties decide, yeah, we've got it in the budget, it's a good investment, let's put it in, even though instantly they could start saving money. But that's showbiz, I guess. It's just part of the plan.
Well, so I see it like when a property is being purchased, acquired, and there is a low flow toilets being installed and things like that. There is a number, there's a cost associated with installing all these low flow toilets, things like that. But there's also a calculation on this is how much you're going to save. We've seen those several times. That's probably the best approach, which I assume that's what you're presenting.
Yeah. Oh, yeah. And
Well,
some of it is cash available too. They may not have a 50,000 in their budget to do all the properties with these devices, even though probably in that year they would save 50,000 that exact year, because some of these insurance deductibles are 50 to 100,000 for some of the major properties. I don't know what you've seen deductibles, but in insurance has gone up. Some properties 35%. So
Do you mean the
premium? Yeah.
Yeah, and I think one thing it sounds like is you may tie your products with people who are selling smart home or smart apartments, because that's the latest generation of depending on the type of property, but those are the last generation of amenities that are available and installed in apartments. And I believe they have some leak detection systems usually. But I think as a part of the whole package for a property, it could be an additional features available in terms of a smart home.
And this is happening, Philip, where Smart Rent has over 400,000 units that they've installed their products into, everything from smart thermostats to lighting to some water leak alarms, water leak detection, so on and so forth. And we have been talking to them about some of our products because I think we have the best products out on the market. There's 29 companies that make water leak detectors, and there's nobody that makes Firebot, which is a residential stovetop fire suppression system. So there's, and I'm just saying this for everybody here, you can buy an apartment complex and then initiate the smart home devices in there, even though it's a cost, but it'll add value to the property almost immediately. Yeah.
So are you attending like conferences, multifamily owners and so on? See, this is where you should pitch your product at those
Gone
conferences.
to apartment management companies. We're part of NAA. We've gone to insurance conferences. We did 11 last year. Insurance, firefighters, and property management. And between that triangle, you're going to get some traction out there for our products. So
yeah, you need like the big owners. That's probably
well,
the people.
that's why I love your group. I've been listening in and everything. And you go to the property management companies, you can go to the engineers and they love it. And they go to the actual people on site because they don't have to hassle with a fire or restoration crew or water leak problems and putting somebody up temporarily in a hotel, but it's the owners who decide. So how do you get to the owners is probably our biggest mission.
Yeah, like if you have to go to the right conferences. I think there's a big conference coming up, which is like really for mature operators, which could be probably your best target.
It's in
I think they're
February.
called.
Is it one of the best ever?
No, I'm thinking of like the FHMC or something.
FHMC or
Something like that.
Yeah, we'll go. Say I'm going to stick with your group because you guys are owners, and trust me, if we do well with Firebot, I would love to be vertically integrated. And I can guarantee that we'll install Firebots in the apartment complexes we purchase, but we haven't gotten there yet. But it could be a possibility.
We'll shoot you some information on what Philip's looking for. Just be respectful for everybody's time. It's Thursday, school night for everybody. But I have your information and we'll shoot you out an email, Mark. Thank you for sharing that information. It sounds very beneficial. And Paula made some interesting points about petitioning the city council. I don't know if you've considered that approach, but I think anything that you could possibly do would help. But yeah, we'll shoot you. Go ahead, Paula.
Just for the apartments that I've been recently in, they were really large. And Greystar was the owner, and we could have used your product big time. So being in a smart city, maybe you could petition city councils of smart cities to become smarter, another SMART goal, to give some type of an incentive or abatement for owners that use your products. If you could be one of their approved vendors and have that on one of their websites, then that would attract a lot of attention because Austin has an approved list of vendors.
Yeah,
that's just what they do. You can't even get the contracts for permits right unless you have one of their approved contractor vendors. So
that's Austin, Texas.
Yes, sir.
Yeah, that's here, the National Multifamily Housing Council. That's a very big conference, but it's really for big players.
And again, I can maybe help you guys at least with intel. We've got one guy in India, Grav, who's wonderful, and he'll set appointments. He'll call up every property management company in the country, and we're just going down the list. We talked to Greystar, Bizzuto Brothers, it goes on, where we're trying to infiltrate into their infrastructure or decision makers how does this work? How do you decide who your vendor is for tree trimming or parking lot striping or lawn care? And again, it goes to plumbers and your locksmiths and all your services that you need to maintain your property. So
It
it's
would be the property manager usually.
Okay.
They have the lead on that.
So what
Yeah,
about
those are
BOMA?
common service.
What
Okay,
about
Paul.
BOMA standards? What about the building code?
we're
And
working
also, what
on
about
that.
having CoStar to get your actual owners and then just
Yeah,
ship directly?
we're working with all the fire marshals across the country, all the fire departments, and of course, it'd be a great
have an
thing to get in the
incentive.
building code because instantly there's a new $1.5 million kitchens built a year. That would be perfect. Same with apartment buildings. Yeah, we're working on that, getting into building codes, but it's we've only been at it a year. But
Your
that
job's about to get a lot easier, trust me.
is that
It is. Yes, sir.
huh,
Due
Wow.
to the Economic Forum's goals for 2030 and 2050. You just need to talk to them.
yeah, we're
Go
doing
see them in person.
well. We're doing that
Dress
too.
well.
Yeah, we've got a meeting with a group in Atlanta. They have 5,000 units nationwide, but we're specing one in Atlanta for them for the water leak detection system. But they've had multiple water leaks this past year, cost them a lot of money. Same with fire. I can maybe send you guys a map. We've mapped out every
Let me see
fire.
when the alarms go off because of a freeze, fire department is notified. And
Yeah,
the
but
fire
we-
department comes out at 3 a.m. And
Yeah,
then they get fines.
we,
So the people that pay the fines are the owners, not the managers.
I
Managers
know,
may
that's
get
what
the
I
hand
say.
slap, but
we could save people a lot of money. Actually, each of one of our sensors, water leak sensors, has a thermometer in it, so we can read the temperature. When it gets down to 37 degrees, we can send a alert to an app or to a dashboard, and somebody knows about it. We're,
I would say the city managers,
yeah.
that's where I would start.
Mark, where are you from? Where do you live?
I've been in Northern Virginia, Springfield,
Oh.
Virginia.
Ah,
Yeah.
okay.
Perfect.
Just, if you put a long string in the Washington Monument and draw a circle, we're 16 miles south of the Washington Monument. So,
I'm over here by Fredericksburg, Mark.
oh, okay, Jeff, look, Jeff, you gotta take a trip up. We're right off 95, right where Fullerton Road is. Gotta come
Uh-huh.
by and see what we're doing. We're working on all kinds of other stuff. We're working on a dryer vent detector.
Working on what?
If a dryer vent gets clogged, right, you don't get,
Oh, yeah.
so it's another source
An
of,
alarm.
yeah.
Yeah, my husband always
We-
tells me about that.
We always see these problems, Mark. As builders, you see them all the time.
They say the majority of the fire on a dryer is because of the vent,
The
right?
lint trap.
All you do is just poke a hole in the exhaust vent, attach our device to it with a tie wrap, and then it's a 10-year battery. Will send a signal into an app that you have no airflow in your exhaust vent.
I would go to the big players that have
Well, we're-
400 to 1,000 units and just be a sponsor at a.
Yeah, I
An
know.
event.
I know. I need you, Paula, to help us out. There's
I'm
only
just
about
saying that,
6 of us. No, you're right. And now we've
Yeah.
talked to 2 range hood manufacturers.
Talk to Julie, talk to Kenny McElroy, talk to those guys.
Yeah, all right.
Go see their meeting, go give them some money and camp outside, and just hand out stuff. Print material and put it on their chair. Go
All
see
right.
'em.
All right, we're getting there. It's neat stuff. All the smart home stuff is pretty impressive. Even the Ring doorbell, actually the locks. I have a lock company too, Baldino's Lock and Key. But now all the apartment complexes are going with the electronic locks that are on the network. So you can change the code instantly. If a tenant moves, you can change the locks that day. Or if they say, I kicked out my boyfriend, I need to change my locks, the management company can do it for them. It's a great tool and it saves everybody money. Or if you're showing the apartment, you have an audit trail of who goes in and so on and so forth. But
Yes,
you
good
know,
luck.
yeah, so we're
Right.
doing all that. If you want to see a group of locksmiths faint, just tell them that in 5 years, nobody will be using keys.
Yeah.
It's already happening, guys.
I'll probably still be using them, just to let you know.
Coming up
Ours?
to
Yeah.
top of the hour.
Thank you, guys.
Well, thanks for listening, guys.
Thank you all for joining us. It was very interesting, Mark. Good innovation. Good luck with your things. Welcome to our next
Yeah,
calls,
I
obviously.
will. I love listening. You guys have such perfect information on purchasing a unit, what you have to go through, what you have to look at. And
thank you.
but comes down to a little bit just a hunch, a little bit of luck. Is this going to be a good complex? And sometimes you don't know.
A lot of work. A lot of work.
Well, good luck, Mark.
All
Good luck.
right.
We wish you the
thank
best,
y'all.
Good luck.
for sure.
Good luck.
Talk to y'all later.
Good evening, everybody.
Bye-bye now.
Bye-bye.
Thank you, everyone.